industry thought leaders from business advisory, tax, risk management, property and superannuation and investments, employment and HR give their insights into the current economic and financial landscape that impacts small to medium businesses around Australia during the pandemic and beyond. My name is Lisa Garrido, and I will be the host this morning, introducing the panel of small business thought leaders in their area of expertise. I should also provide the following general warning that the views and opinions shared on this webinar are designed for general information only and are not designed to be taken as specific advice for your specific requirements and circumstances. Feel free to reach out to us or to any panel member in this webinar for any specific advice that you need. We are available on Facebook and LinkedIn for your information. I'd like to introduce the panel now. Ian McLaughlin from Imperium Accounting and Tax.
Thanks, Lisa. Good to be here. Welcome, everybody.
Sam Qureshi from Moneyclip Private Wealth.
Hi, Lisa. Hi, viewers, and great to be on board.
And Adam Lyle from The Biz Doctor.
Hi, Lisa. Let's go. Get into it.
Okay. Great. So let's start. Ian, I understand there's a lot of grants being offered at the moment. Could you give us an update on that, please?
Yeah, sure. Thanks, Lisa. So there was one that got released last week. So this is called the Small Business Fees and Charges Rebate. Now, basically what this is for, so it's for a sole trader, a company or a trust, basically the owner of a small business and not-for-profit organisation in New South Wales. You may be eligible for a small business fees and charges rebate of $1,500. So this is to be offset against fees and charges in the particular field. So food authority licenses, liquor licenses, trade person licenses, event fees, outdoor seating fees, or council rates. So this rebate is available until 30th of June 2022, and you need to have incurred the expense from the 1st of March 2021. Now, how you apply is you go onto the service.newsouthwales.gov.au website, you register your ABN, and then you will be sent a further link, which will then ask you to upload your receipts. And if they deem that those receipts are in those categories that I just mentioned, you will then be reimbursed for the costs of those expenses. So just the eligibility requirements. So you have to have an Australian wages bill below the New South Wales government payroll tax threshold of 1.2 million per year. You have to have the ABN, obviously. You have to be registered for GST, and you have to provide a declaration that the business has a turnover of at least $75,000 per year. The next one is the Northern Beaches Small Business Hardship Grant. So if you're an owner of a small business or a not-for-profit located on the Northern Beaches in Sydney, and you were impacted by the Public Health Order of 2020, you may be eligible for a one-off small business hardship grant of $3,000 to $5,000. So basically, this is meant to cover expenses such as unavoidable business operating expenses. So for example, utilities or rent, financial, legal, or other advice to support business continuity planning, marketing and communication activities, or other activities to support the operation of the business. So the application for this one opens on the 30th of April, 2021 and closes on the 11th of June, 2021. So there's not really a lot of lead time for this one. So it's one to be aware of. So just like the other grant, you will register for this by jumping on service.newsouthwales.gov.au, and then you'll be redirected to the grants page. Once you click on, there's a box and it's just grants. If you click on that, you'll be able to find it. So the eligibility requirements, so you have to have an ABN that is registered in the Northern Beaches local government area. And you have to be able to demonstrate that your business is physically located and primarily operating in that area as well as of the 1st of December 2020. You have to have fewer than 20 full-time equivalent workers. You have to have an annual turnover of more than 75,000 as of the 1st of March 2020. and you have to have had those unavoidable business costs that I mentioned, such as utilities and rent. And then you also need to, similar to JobKeeper, it's a 30% test in the decline in turnover. So you need to compare a 2-week period from any 2-week period from the 19th of December 2020 to the 10th of February 2021. And you need to compare that to the same 2 weeks in the prior year. So if you're looking at from the night for the 2-week period beginning from the 19th of December 2020, you would then need to compare that to the 2-week period from the 19th of December 2019. And if that was a 30% decline in your turnover, then you would be eligible for the $3,000 grant. Now, if that turnover decrease was 50%, then you would be eligible for the $5,000 grant. Now you're only allowed to receive one, either the $3,000 or the $5,000 grant. And look, a lot of this can be done also, just a handy tip. A lot of this can be done from the Service New South Wales app. So you don't really have to jump on the website. So a lot of people I know have already got the Service New South Wales app on their phone where you can access your license, for example, where you can also apply for these grants through your business through that app as well. And just whilst we're on it, I'll just make a reminder that there is the 4 $25 vouchers worth $100 that you can use at eligible businesses. So you can also apply for these through your app as well. And then when you're in the cafe or restaurant where you want to use these, then you can simply just pull up, once you've registered, you can simply just pull up these vouchers and use them at the counter, one a day. So you can only use $25 a day, but then the next day you can use the other $25 voucher. So look, just again, so the website to go to, service.newsouthwales.gov.au. They're probably the major two that I wanted to talk about today, but I think that they're some that, could come in quite handy to people out there. Lisa.
Oh my gosh, I really do love that app. It is the source of a lot of information. And for the viewers out there, don't forget there really definitely is that the voucher to use for restaurants and cafes to support your community locally. So please get onto that app. Now, speaking of which, Adam, what is going on with your predictions, right? So businesses are obviously going well. What's your take on that? Update from you, thanks.
Well, if I had one of those little balls, the crystal balls, I would have smashed it. The March business survey results are out, and there's some interesting things that have happened. Firstly, if you would to read what's going on, you would think, oh, wow, this is fantastic. Everything's going well. Now, confidence, though, did actually take a dip of 3 points, but still is way above its long-run average. Confidence business conditions, though, have risen 8 points, and that's being driven by a couple of industries. First of all, manufacturing and construction is well ahead of expectations. Confidence is highest in finance, business, property, mining, and construction. Retail, though, still way down, and there's going to be some moderation in that market space moving forward. There's been some larger retailers that are starting to struggle, if not have already collapsed. Conditions improved all over the country except for WA. I wonder if the hard lockdown has had anything to do with that. Lisa, you'll be happy to know that South Australia and Tasmania saw outsized gains in that month, and of course the rest of the country have had some smaller gains. I just wanted to cover off on a couple of the key points that have come out of this, is that if you look at all of the graphs, every single one of the graphs, and by all means, our viewers should be looking at this information themselves. I know that the NAB does one, and a couple of the other major institutions do one as well. But if you look at all of the graphs, they're all above the line of the pre-COVID confidence. So that is a huge indicator that that things are starting to really fire. Now, I did mention last week and recently as well that what goes up must come down. And once the business conditions and the economy starts to really fire, that's when you'll see some fiscal change to rein in some of that growth and to make sure that we're starting to pay back the humongous debt that we are in to pay for the recovery effort. I think if I was the treasurer of the country today, I'd be looking at these figures and going, you little beauty, I've just saved Australia from an absolute obliteration. Interestingly, forward orders are still not as much as what they probably could be, but they are certainly now above March 18 figures. And then when you go down to cash flow, which is obviously cash is king, we are now at a confidence curve of about 30. So the interesting thing with all of those things is that businesses and our viewers in the SME space are going to be able to have some buoyancy moving forward through to this year, as long as they're not in a sector that relies on discretionary spending, and as long as they're not in a sector that has been further constrained by travel restrictions, etc. We do need to make sure that our viewers are preparing for the rainy day, or as I would say, the COVID day, when restrictions may come into force. They might have some isolated lockdowns depending on some isolated incidents where people might have COVID. Given that today is a day to be celebrated, we've got the New Zealand bubble officially happening today, and people are actually on planes in the air between the two countries. And that is actually a fantastic contributor to the confidence curve. Borrowing conditions are still tight, and banks are giving money out, but they are going to be a little bit careful as to how they're going to do that. And obviously, Lisa's going to cover off employment, so I won't necessarily get into that. But with the expected decline over the course of the year, which will still happen, the decline will nowhere near be as much as what I had wrongly predicted in the middle of last year to the end of last year. So I'm a man of my word. If I've got it wrong, I'll admit it. I'll accept it. I caught up with Sam and Lisa and Ian, and I had to eat some humble pie on Friday, but that's okay. I'm actually glad that the economy is rebounding as quickly as they can. But as those return spikes are very sharp, so they will plateau off or come off at some point, particularly once the government starts applying fiscal change in terms of making sure that our tax structures are sufficiently producing sufficient tax revenue to pay for the 100 times debt that we've incurred to pay for it all. That's it from me.
I'm just glad your predictions were wrong, Ads, and I'm sure
So
that humble pie was delish for sure. Speaking of banks lending money left, right, and centre, although the conditions are fairly tight, I'd like to get an update from you, Sam, on interest rates and, of course, this crazy property market. Over to you.
Thank you, Lisa, and thank you for Ian and Adam for both of your insights this week as well. It's been good. So in relation to interest rates, Lisa, they actually remain pretty steady at the moment. Most of the fixed rates for owner-occupier principal and interest rates are in that high ones to mid twos as a rate, and for variable rates, mid to high twos as it stands now, with investment loan rates slightly above that, and of course interest-only rates slightly above that as well. And RBA recently released some financial modelling for house prices. One of our investment partners has used those models to do some predictability for house prices for the next 3 years. And the results that's come out, which is essentially the RBA modelling guidelines, points to property prices are likely set to continue to increase for the next 2 or 3 years. Their prediction is between 16 and 35% increase in the next 3 years, with a year of that being the next year, 2022, as the largest increase in those. Now, as mentioned before, unless there is a massive negative catalyst, which is, at this point in time, you would say that would have to be a failure of the vaccine, or maybe APRA stepping in to cool down the lending rules. I can't really see the current juggernaut not continuing for a while longer. And obviously, every week, I'm sure someone that you know is involved, or you hear a story of someone who is paying ridiculous amount of money for property, which is basically those things that were somewhat ridiculous now seems to become more of a norm, which is interesting to see. Now what will happen after this period of time is anyone's guess. Now, sometimes when property cycles finish, they plateau and they just go nowhere for a period of time, while on some occasions they'll actually decline. So in 2011-12, they declined from mid-17 to early 19s. Property prices adjusted between 5 and 20%. And I remember coming up to the mid-2017, no one believed that the property prices would even stop going up, right? With the weight that the rates were, the rates of property increases. So we will have some type of decline or some type of plateauing, but it seems as if it's not going to be here for a little while yet, unless one of those catalysts comes through. I do personally believe in the old adage that you make money in the property when you buy it. So obviously you need to do really good research at the moment to make sure that you can buy well. And of course, if you're buying for the long term, prices adjust better for you because you're holding it for a longer period of time. Now, of course, the thing that everyone needs to be very mindful in property, that if you are still involved in what we regard as property speculation, that's still fraught with danger, because you have still very high barrier to entry with stamp duty and selling costs. And obviously, if it doesn't work out for you, then it's not going to be a happy story. And we've had some people that I've come across over the years who property speculation has led to multiple hundred thousands of dollars of losses, basically. So be mindful of that. Now, I should also point out that the auction results had yet another really great week across the board. In fact, we averaged 80% clearance across the whole country, with more than 2,000 properties being sold. So the actual numbers are still down versus a few years ago, but it seems that not much is holding back the house sales at the moment, and not even the school holidays. Now, of course, lack of stock, record low interest rates continue to be the trigger for those at the moment. And of course, if these trends continue, who knows what, we might even see a rebound in the inner city apartment market, because people move from properties to other areas within the property market. And that particular area, inner city apartment, has been quite sluggish. And so you never know. You might even see a resilience in that area coming back at some point. Now, in terms of the share market, Australian stock market had a really good run last week. It increased by 1%, and in fact, it hit a post-pandemic high. So we're back to a period where it was before the pandemic, essentially. It was led by the tech stocks in particular. And it appears that there's going to be some really good mergers and takeovers as the new flavour of what's going to be happening in the share market. So certainly look at that. For example, there's a second suitor for Crown Casino at the moment, and there's a merger in the lithium mining, which is basically set the market on fire. And of course, my old company where I used to work, another very long-running Australian-owned company, Coca-Cola Amatil, CCA to those who work there, will move into overseas ownership hands after the shareholders voted to sell it to the Coke Europe. So that'll be a sad day for all of us that worked there at one point in time. CCA has got a very deep-rooted history in the Australian share market. Now, during the month of May, I will start a series of tips for super strategies running into the end of the financial year. But I thought just to kickstart that, I'll cover off on what is a prepaid interest on investment loans as a strategy. So this is a strategy where it allows you to prepay interest on an investment loan for the year coming up, starting from 1 July. And basically you request a discount from your lender. And by prepaying that whole year's interest in advance before 30th of June, you may be able to claim that in your tax return all in one go, and of course refer to your accountant like Ian in relation to that. Of course, you need to make sure that these investments produce income. That's a key thing. And you need to be mindful that you're bringing forward next year's tax return into this year. So cash flow will help this year, but obviously if you don't continue into the following years, you will have a cash flow gap in following years. But certainly it's going to help in being able to offset your potential taxes this year, this financial year versus the next. So of course, speak with your accountant about the appropriateness of this, but that's one that you could potentially put into action for you. And with that, back to you, Lisa.
Oh, Sam, this actually, I've got a few questions, I suppose, and I hope you don't mind, guys, and I'd like to interject. Maybe at some point in the next few weeks, you can give us an update as well when you talk about the property prices increasing. Is there any statistics in relation to the different states, and relative to the states, which states are actually increasing and at what percentage? Not sure if you can find that information out.
Yeah.
And also, I don't know, guys, if we know of any experts in our networks that could give us a breakdown maybe of the properties that are being, in terms of the properties being bought, are they for first home buyers or are they investment properties? Because of course that will really talk about the rental yields, and we can really look at that in more detail, if that's okay. I'm really looking forward to your update next week, Sam, on that.
There's definitely
the grants, I mean, not the grants, but the superannuation strategies leading now up to June 30. I think it's absolutely key that all our viewers start to think about, particularly viewers in business, on what their superannuation strategy would be.
Yeah, Lisa, there's definitely been an increase in the first home buyers entering the market. Although I would say with the current strength in the property prices, that might actually wane now. But as of last year, there's so many new government initiatives put in place in terms of discounts in stamp duty and building allowances, etc. That's obviously helped a lot more first home buyers to get into the market. Of course, whoever actually did that in the last 12 months would probably be in a much better position than if you started that today, given that the prices are increasing. And even if you take this year, since start of January, the prices are up almost 6% on average across.
Oh dear. Woo. Yeah, very interesting. And then speaking of that trail of good news, again, I've got some good news for employers. The unemployment figures have been released last week on the 15th. And of course, it shows a massive recovery, a strong recovery continuing. So the data released by the ABS revealed a 0.2% drop in unemployment rate, now at 5.6%. So all of the discussions we've been talking about in the past few weeks about the cost of a bad hiring is all now very relevant to all of you viewers. So that 5.6% unemployment rate is a figure that's just 0.4% higher than March 2020. This is preceding last year's lockdown. Isn't that amazing? The youth unemployment also decreased by 1.1 points to 11.8%. So between Feb and March this year, the number of people employed rose by 70,000 to reach just over 13 million employed, indicating that the Australian recovery from the COVID-19 pandemic is holding really strong. So in other words, 70,000, over 70,000 jobs were actually filled in the month of March, Feb and March. That is phenomenal. So in terms of the number of hours worked, it also exceeded March 2020 for the first time during this pandemic. So employment rates among young people and women have risen, and they're actually on top. So just to give you a few statistics on that, in March 2021, 62.6% of people over 15 years old were employed, which was higher than March 2020, which at the time was 62.4%. Not sure whether job maker has a lot to do with this. I don't have any statistics on that in relation to the job maker initiative. So when I do find out, I'll keep you guys in the loop. So the proportion of women employed also was the highest it's ever been. So that's at 58.5%, half a percentage higher than in March 2020, whilst the proportion of men employed remained slightly lower than before the pandemic, 66.8% as opposed to 67 in March. So again, to sum up, 80% of the jobs went to women and around half to young people. So while that is absolutely a positive sign, we will find out a little bit more about the true impact on the unemployment rate now that the JobKeeper stimulus package has ended. So I'll be really interested to see what the ABS will come up with, like you said, Adam, along with the payroll jobs data on the true picture of the Australian jobs market post JobKeeper. So in the last few weeks, I've been talking about staff engagement, and because of the higher statistics now of employees from 18 to 24 years old being hired and is on the rise, clearly what we need to start looking at is really how do we keep this age group engaged, because statistically as well, people in that age group tend to only stay in their roles for over 6 months. Okay, so now that we know that this is the hiring number, the higher number of people being hired are in that age group, let's have a look at some strategies to engage them. So a survey done by ME Bank has pointed out 3 key drivers to engage people in this age group. The first one is being satisfied on how decisions are being made. So that's a bit of a challenge for us employers in being able to articulate how we make our decisions to that particular age group. Second, it's showing contribution towards the learning and development. The surveys actually have stated that the younger workforce have kind of given up on the great Australian dream in terms of their best job ever, and instead have been accepting positions so that they could actually continue to earn an income, right? So they're not looking at the lofty ideals at this stage. So when you hire them, look at learning and development strategies for them to retain them and keep them engaged. And the third key driver is a sense of belonging. So in terms of some examples on how these have been implemented, let's have a look at what AMP HR have actually started to implement. They have put a lot in their onboarding process, which goes a long way. Like I mentioned last week, what you do in your induction and onboarding is actually key. So one of the strategies that they've implemented is a buddy system, so that the incoming hire has several points of contact with another person in the business, and therefore keeping them, giving them a sense of belonging to that extent. The other strategy they put in is implementing some virtual lunches for those that are working from home. So it gives an opportunity for them to meet other employees and that they don't then get lost in this virtual world. So they do have a budget for social opportunities virtually for allowing employees to reconnect. An example of which is cooking classes, virtual cooking classes, maybe a murder mystery night as a social event, and an event where they can enjoy ordering food virtually and having a meal together. So really simple strategies that are simple that people can bear in mind. But lastly, please make sure you look at your learning and development opportunities very much so in the first 6 months of their employment. So that's really it for me. I'm going to be looking forward to any more statistics on the employment rate post the JobKeeper. So do we have any questions, guys, presented by the panel? Do we have any questions for each other?
I just want to know whether, Captain Snowden did it in the lounge room in Lisa's kitchen. Sorry, did it with a knife in Lisa's kitchen.
Oh dear, another question.
I think it's really interesting, Sam, what you're talking about there with the apartments. I was talking to some mortgage brokers last Thursday night, and they were saying that they're finding that the apartments are coming back because people are being priced out of those houses. So they're now looking to apartments. So yeah, it's going to be interesting.
Yeah, yeah. The melting pot, well, the issues that we're going to have is this increase in the values and obviously lending on one side, and how valuers value those properties for those loan applications, right? So we've had some who've come short, more in the apartments than houses. So, I guess, I think we're going to see some conservatism from the valuation companies coming in as well. So, and, obviously there'll be, it'll be a bit of a clash with the demand and what the lenders want and so on. So be interesting to see how it all plays out.
I'm interested to know where people are migrating to, the average Australian that are looking to downsize. I would find it extremely difficult, to come back to the Sydney market, for instance, as an example, with the rising cost of properties. So where are people migrating, and how is that creating employment opportunities, obviously, or opportunities in those regions?
Yeah.
Yeah.
I was out in southwest Sydney over the weekend, driving back from Bowral up into the Sydney basin, and the amount of huge developments going on either side of the freeway, and even heading up to, I was up at Richmond during the week. It's just absolutely fascinating how much development's going on in Western Sydney at the moment. I flew with the Air Force over Western Sydney during the course of last week as well, and going from Richmond down the Nepean River, following it down to where the new airport is, and then coming back up. And it's just, there's just mountains and mountains and mountains of development, dirt, stuff going on. It's effectively, we already know that the Western Sydney economy is the third largest economy in Australia. This is just going to take it to the next level. I wouldn't be surprised if it starts to place Western Sydney on par with Victoria. It is massive, the amount of stuff that's going on out there.
So Adam, when is that airport? When was the target projected opening of that airport?
30 years ago.
2026.
2026, is it?
2026,
yeah. Originally, it was going to be 30 years ago, but 2026 is right. That's the current first plane taking off and landing. But if you do get to take an opportunity for a scenic flight across Western Sydney, it'll blow your mind.
I guess I just hope that, whether it's Western Sydney or whether it's some of these regional areas that we hear people are moving to, etc., I just hope that there's enough infrastructure and amenities being built to cater, because, a lot of these places can't actually cater for all these movements of people, right?
Correct.
Our own cities can't cater for it properly. So little on these, smallest towns and all that. So I wonder if that becomes a new issue in 2 or 3 years' time.
Well, yeah. Sam, the councils or the local governments have to address that, because virtual working is here to stay.
Yeah.
It definitely is. I've been reading quite a fair bit on what HR leaders are predicting about this, and they're predicting exactly what I see and experience with our client base. It is here to stay, and therefore, if you are looking to hire people from interstate to work for your head office in another state, which is a strong possibility, you have now access to not only national talent, but global talent to do these. Wherever you are based, the home office or wherever that office is based, we need to have commercial grade internet connectivity. Really, it's that simple. So I think we will definitely have to get updates on any technological and digitalization innovations across the board. Really good to watch that space. All right, well, if you don't have any other comments and questions, we don't have any questions from viewers at this stage on the chat box, I'd like to conclude today's webinar, and like to invite everybody for next week's webinar. We'll see you again at midday on Mondays at Business Insights. Have a good afternoon.